Well, is it time to buy the euro? Well, I think it's interesting in the light of the most recent ECB central bank decision that the guidance that was given by Mr. Draghi extended the monetary policy outlook or the spectrum through to the middle of 2020. Now, why is that interesting? Because, of course, that goes beyond the end of his term. His term comes to an end at the end of October. So in the effect, he's binding the hands of his successor. Now, why does that matter? Well, it matters because, of course, what we're seeing elsewhere in most other central banks is we're seeing increasing discussion or moves to lower interest rates. We've seen that most recently in places like Australia, where we've seen rates cut to fresh record lows. And we've also seen markets really anticipating very aggressive Fed easing through the course of the rest of this year. So if the ECB are in effect sitting on their hands through the rest of both this year and into next year, that provides some degree of residual support for the euro from an interest rate spread story. But the question is, does the Eurozone economy warrant or require monetary easing? Well, I think if we look at the external picture, you can look at the headwinds that we're seeing from the trade side, and particularly the uncertainties that we're seeing in the German economy because of the weakness of external trade. And of course, in that context, we have to look at global headwinds and trade tensions. Then it would lead you to the conclusion that perhaps the ECB are being a little reticent in terms of additional stimulus. Also, if you look at inflation expectations, the five-year inflation swap is testing record lows at just around 1.2%. And that's fallen around 20 basis points in the last 6 weeks or so. But in the context of both of those considerations, the ECB seem reasonably relaxed. In terms of the inflation expectations component, the ECB still view that inflation expectations are not becoming de-anchored. And in terms of the growth trajectory, I think the ECB have made particular reference to the stability on the domestic side. And I think that's where markets are perhaps missing a little bit of a trick, because the domestic consideration or the domestic growth trajectory in the Eurozone remains remarkably robust, or certainly compared to expectations. Mr. Draghi has re-emphasized the importance of endogenous growth on a number of occasions, so we're seeing that reflected in terms of consumption growth picking up, also construction in particular in Germany is also advancing. So I think that does suggest that the endogenous growth story is rather better and perhaps underestimated by the market compared to the exogenous factors which are overplayed by the market. So I think the context of those two factors does suggest that the euro, despite the fact that it's appreciated by about 1% this quarter thus far, has further room to go. And I think in the second half of the year, we can see the euro appreciating against the dollar by the region of 4 to 4.5%. I think we can probably see the euro outperforming sterling as, of course, hard Brexit concerns continue to bedevil the performance of sterling. And I think we can also see some degree of residual benefit in terms of euro gains versus some of those dollar block commodity currencies. So I think it is a case that the euro does look in a relatively positive state. I think if and when we see the market closing above the 200-day moving average in euro dollar, that comes in at around the 113.65 level, then I think we can and will start to see additional appetite starting to come back into the euro and the Eurozone story. We still have very significant residual short positions in the market, which I think are excessive in relation to the broader macro dynamics. So net short positions still remain more than double the one-year moving average. So there is scope for a short covering boost to the valuation of the euro. And I think the one obvious overhanging risk factor, which I think investors will remain mindful of going into the second half of the year, it is that residual threat of auto tariffs coming back onto the table. So I guess that's the one obvious factor which will constrain euro bulls, but I think markets can and should look through those particular risks. I think the market should also ignore or certainly put to the side any nascent political risks, in particular in relation to the budgetary backdrop in Italy, and that provides a better backdrop for the euro in the second half of the year. So I think the euro is set fair for modest gains, as I say, in the region of 4 to maybe 4.5% at the outside against the US dollar in the second half of the year.